Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to this video today. And as usual, if you could please don't forget to like this video and subscribe to my channel. That will be really amazing. I really appreciate each and every one of you as my copiers. So in today's video, I'm going to be talking about what happened in the markets last week. I'm also going to be talking over the major news that happened, talking a little bit more about our strategy and also our performance. So let me get started. So last week, our portfolio performed pretty well again. It's performed very well so far this year. Our portfolio was up about 2.81% for the week. And if we compare that to the other benchmarks, we're doing particularly well this year. And Nasdaq was up about 0.3% last week, and the S&P 500 was up a little bit more at about 0.8%. If we compare with that with the 𝗬𝗶𝗀𝗃𝗀𝗀, that was up about 1.68%, as it was quite a decent week for the UK and European indices, as well as Bitcoin, which was up about 6.13%, which our portfolio benefited from. So last week, obviously, the S&P came with a small increase. Europe performed pretty well, but China was a little bit more subdued. Bitcoin continued rising and altcoins have started to play catch up. Obviously, there was a bit, I'll talk about this in a little bit more detail later, but there was lots of moves from people who worried about the banking system after the mini banking crisis that we had, and they started to deploy a lot of money into Bitcoin. Which has been happening over the last month or so, but we are starting to see some of that flow into altcoins. So people are calling for out season within the next couple of weeks. We've also done lots of short-term trades this week. We did some short-term trades in Weight Watchers. I did about 3 trades in Weight Watchers last week, and that was because the moves were so severe and there was quite a lot of volatility. And I managed to time the tops pretty well and then come out with profits between 3 to 5% on each trade. So that was quite highly profitable for us in the short trades. As well as Tupperware, which had a similar reaction. The price went down quite significantly and I managed to catch it near the bottom and generate a nice profit. This helps us to kind of eliminate some of the volatility in our portfolio, as well as make excess profits as we can from short-term trades. I also closed a longer term position in EWJ last week, which is a Japanese ETF. I decided to do this. It was at a very slight profit, but I decided to do this because I wanted to use that money for other purchases within our portfolio. I'll talk about those in a little bit more detail later, but that helped me to generate a little bit of cash to do some more investing. So if we look at a 2023 year-to-date basis, we're doing extremely well, actually. Our portfolio is outperforming. And so our portfolio is up about 22.41% for the year. And if we compare that with the Nasdaq is up about 15.8%. It's done pretty well with the whole tech recovery this year, as well as the S&P 500, which is up only 7.8% for the year. The 𝗬𝗶𝗀𝗃𝗀𝗀𝗃, which is the UK index, was up about 5.64%. But there's obviously quite a lot of financial stocks in there, which has held that indices down, as well as the Hang Seng, which is the Hong Kong index, which is up about 3.71%, and Bitcoin is up a whopping 80.76% this year, and it's almost doubled from its 15,200 or so low. So all in all, we're doing pretty well. Thank you for all the copiers that have stayed patient, and I really appreciate all the new copiers that are coming on board at the moment. I'm very confident about our portfolio on a long-term basis, and it's really great to have your trust as investors in me. So I really appreciate that, and I'll make sure that I look after your hard-earned money, and I try to generate strong profits in the future. So on to the main news last week, and as I said, the S&P and Nasdaq performed pretty well last week. We also saw stocks jumped on the news that the CPI inflation rose only 0.1%. That brings the year-over-year rate to 5%, which is the slowest pace since May 2021, and below expectations of 5.2%. So it's very positive signs in terms of the CPI reading that came out. It's showing that CPI inflation is decreasing gradually on a year-on-year basis. I'll go over a chart a bit later to show you how that's broken down and which particular sectors are kind of holding up and which are kind of a bit more sticky in terms of inflation. But it's generally coming down. So this is bringing a lot of hope that the interest rate rises from the Fed may start to go down within the next kind of 6 to 12 months. We also saw in the futures markets are now starting to price in a 46% chance of the federal funds rate ending the year at least 50 basis points below its current target rate of 4.75 to 5%, and a roughly 78% chance that the target would be at least 25 basis points lower. So basically what the market is saying, what the market's dictating, is that they're expecting that interest rates will start to decrease. So they'll start to decrease those interest rates sometime before the end of the year. So I think there's a good chance of that happening, but they are still pricing in potential for one more interest rate hike before that happens. If we look at the weekly jobless claims, which came out last week, it shows that it rose to 239,000, and that is a slightly more than consensus estimates, but remain below their levels through most of March. So yeah, we're still seeing that unemployment in Europe and in America is still very low and is still at near historic lows. Despite them increasing those interest rates. And that is holding up a lot of hope that we may have a shallower recession than had initially been thought. And there is a lot of demand, especially in the services industry, for new jobs. And as inflation is starting to come down, it's a pretty positive stat. We're also seeing the Eurozone industrial production in February has risen over 1.5 and 2% over year, which was stronger than expected. So in Europe, is staying pretty resolute, despite, again, those increases in interest rates being pretty hard for a lot of the companies in the Eurozone. But industrial production is actually rising. We also saw in March in the Eurozone, retail sales volumes fell by 0.8%. So basically it's showing that in Europe, retail sales are starting to come down, but it is very, very slight. So we're still seeing quite a buoyant retail sales, as even if we are kind of steadily going into a recession. We've also seen UK GDP has remained pretty flat month over month. The result was slightly below expectations as strikes weighted on public services. However, the revision to January's GDP figure indicated that the economy expanded to 0.4% that month. The IMF has predicted that the UK's economy would shrink 0.3% in 2025, a projection that was less than its previous forecast. So, and many of you will know that in the UK, there's been a lot of kind of strikes that have gone on. There's been strikes in the kind of ambulance services, as well as kind of teachers, as well as, firemen and firewomen, etc. So there's been a lot of disruptions overall in the economy and, public services in the UK. And they are starting to forecast that this may have an effect on the UK economy, and that's why it's predicted to shrink just 0.3%. But to be honest with you, I still think it's holding up pretty well considering, and actually a lot better than I thought it was. As some of you may know, I've been pretty bearish on European stocks over the last kind of few months, and that is because they were pretty far a lot slower to increase their interest rates. They had higher inflation in the first place, and I expected it to go on a lot longer. I'm still pretty bearish on European stocks, but I have to admit they have held up pretty well, especially as we've seen some of the stocks, some of the indices starting to creep up near the highs again after the recent dip in the banking sector that happened. Is starting to rise again. We've also seen concerns in China over the China-Taiwan issue. There's been military drills around the coast of Taiwan, which has put Taiwan on alert. However, I have a little bit of a different thinking on this, and I think it's much more unlikely that China will issue a kind of a military attack on Taiwan. I expect the plan of attack is going to be a lot more kind of financial and trying to strangle Taiwan by trying to influence countries to do less business with them or put kind of regulations in place around that, or potentially cause issues with supply chain issues. We know that Taiwan is pretty big in the semiconductor industry and pretty important. So I expect a lot of that attack to be kind of more financial than physical. We also seen in China the producer price index has slid 2.15%, and that's the lowest since June 2020, and it's 6 straight monthly decline. The latest data trailed the government's consumer price index target of around 3% growth this year. So yeah, basically, obviously China's reopened after what's happened in COVID. It was very late to open after COVID. They had their strict COVID-19 policy. However, things have started to reopen, and I think there was a lot of expectations that China was going to start to produce again at a very high level, and they were going to drive in all of these sales by them reopening, and the demand was going to come back online very quickly. It has to be noted, though, that it is slightly slower than expected, but it's quite understandable, to be honest with you, because if you think about a lot of these factories, a lot of this area where a lot of stuff is made, and a lot of the demand that might be coming online isn't instantaneous, because for example, a lot of people haven't been to work during that COVID-19 period, or they've had to shrink their workforce because they've had a lot weaker demand, or they've not been able to provide the supply that they needed to satisfy the customers. This takes time to get back on board. There's also like permits to be had, etc. So I just think it's a lot slower than people are expecting, but I still expect the demand and the supply to start to increase over the coming months as China can build a little bit more momentum and can get the staff back to work. We're also seen on the trade front, China's exports have unexpectedly rose 14.8% in March from a year ago. And this has surprised analysts, but hasn't surprised me as much, because as you said, from the year previous, there was very low levels of exports, and that's because it was difficult because of the COVID-19 pandemic that was happening. And I think a lot of these new exports are kind of more organic, and I do actually expect that number to actually increase over the next couple of months as they're able to come back more online. So I'm still very positive about China stocks, as China stocks in our portfolio. Do think the reopening will be slightly slower than people expected, but I expect our stocks like Haidilao and 𝗏𝗏𝗏𝗏 to really start to show some significant growth and a bit more strength now that the demand has come back online. So on to our top 3 performing stocks for last week, and our top performing stock with a whopping increase last week of 24.5% was ZIM Shipping. I'm very confident on this stock moving forward. I expect that shipping rates could have started to bottom now, and that we could have some increases in terms of the shipping rates, which will be pretty good for ZIM, especially as China comes back online and there's more demand, etc. Also, they pay a really good dividend as well. So in our portfolio, that is sitting there earning us a very large dividend as well. So very happy with that investment. Second best performing stock in our portfolio last week was Sinclair Broadcast Group. This is a stock I put into our portfolio probably around 5 or 6 weeks ago, and that was up about 17.27% last week. But that is just really kind of shown a lot of strength since I bought it. I bought it because it was very beaten down. It had a very low valuation. And I think it's going to prosper, especially as the election campaign starts to heat up in the US for different candidates, etc. And there should be a lot more advertising money going into the broadcast group. So pretty happy with the way that investment's going, and it's pretty up in our portfolio. Third best performing stock for last week is ThyssenKrupp, and that was up about 11.5%. And that is starting to do well on a year-to-date basis. So on to our Death by Charts edition, and I wanted to go over 6 different charts for you today, and I'll try to do it quite quickly. So the chart to the left is really interesting because this shows that the US inflation is on the way down. Overall, CPI has moved to 5% in March, and that is the 9th consecutive decline in the year-over-year rate of change and the lowest since May 2021. So all good signs in terms of inflation starting to come down, and it's not close to the Fed's target yet, but I think it's inching closer. And I think within the next couple of months, we might see the end of quantitative tightening. The rates may hold for a while, but I do expect them to go down and there to be some more quantitative easing next year. The second chart to the right I wanted to show you is the year-on-year change, and that is from June 2022 to March 2023 in terms of the CPI report. So the purpose of this is I wanted to show you the different breakdowns in the different segments that makes up inflation and how that overall number is put together. So since the peak in CPI last June, which was at 9.1%, I believe, most of the major components have seen a noticeable decline in their year-over-year inflation rates. The 3 exceptions in there which have become quite sticky. So those are the ones that are making the inflation rate go down slower is food away from home. So restaurants are increasing their costs. And I think a lot of this has been to do with obviously the raw material food going up, and this has been kind of passed back on to customers. Transportation, so like airline fares, etc. And that has gone up mainly just because of COVID-19, and lots of people couldn't travel for a long time. There was supply chain issues as well. This led to less transportation of people and goods. And obviously there's been a lot of demand now that it's come back online, so the prices have gone up. Also seen shelter has been particularly sticky, and that is because obviously we saw a huge rise in the cost of housing in 2020, 2021, even 2022. But that has started to come down, albeit it is quite sticky, and it takes quite a while for example, rental rates, people to come off contracts, and the demand for housing to come down, which in turn should start to reduce the costs. So that is a major lagging indicator, and I expect within the next 6 months we're going to see that come down even more. Third chart I wanted to show you was the US rents versus US shelter CPI. And that is while Shelter CPI has been playing catch up, it still shows only a 16.4 increase since the start of 2020 versus a 21.4 increase in actual rents and a 38 increase in home prices, which means that we could still see more increases in Shelter CPI to close some of that gap. So it's basically just showing the difference between the US rents and the US Shelter CPI, and it's showing kind of that lagging effect. Fourth chart I wanted to show is the US monthly rent versus US Shelter CPI. And what I really wanted to say here is the lag ends and Shelter CPI stops moving higher. This will have a huge impact on CPI. It's hard to say that when this will occur, but with each passing month, we're getting closer. Okay, the fifth chart that I wanted to show is just the target rate probabilities for the Fed meeting that's coming up on the 3rd of May. And the market is pricing an 80% probability of a 10th rate hike. That is most likely to be a 0.25% or a 25 basis point rise. And the market is starting to price that in as potentially the last increase of interest rate rises before they change their monetary policy. We'll have to see how that goes. And obviously that will depend on how that inflation number, if that inflation number continues to go down closer to the target. But that is the expectations of the market. And with that being said, the last chart, this just shows if that Fed funds rate is implemented at the next FOMC meeting, the rate will be at 5% for the first time since September 2007. We also must know that, again, there's lagging effects on these interest rate rises. So this could have more consequences on the economy at a later date, the longer they hold at these higher rates, because it's not just about whether they increase those interest rates or not. It's mainly about how long they're at those interest rates and how they really cause demand destruction, which is the whole point of increasing those interest rates, so inflation goes down. So over to the crypto news and views. Crypto has done pretty well this year. As I said, Bitcoin is up about 80%, just over 80% on a year-to-date basis, and is very close to double what it was at the lows in around November of 15,200. So it's performed really well. Main reason, as I've said previously, and I just did a post on this last week on eToro, main reasons is people are not confident in the banks at the moment because of what happened in the mini bank crisis. And I think Bitcoin does act as a life raft during these times. I think Bitcoin is a consequence of two things. So I think one, it follows pretty closely to the new liquidity that's coming into the market, and with the balance sheet and also the M2 money supply, you see as money supply starts to increase, you start to see an increase overall in the Bitcoin price, but also at key times where confidence in a system, either in a government or in banks, starts to falter. People start to look at Bitcoin as a store of values, something that is decentralized, which is out of the hands of banks, other institutions, and the federal government. So people are starting to allocate more money into Bitcoin this year. And also we've seen that in other markets as well, like money markets have increased the inflows quite significantly as people just don't want to hold their money in banks, mainly because of inflation, but also because of the lack of trust and insurance behind having major amount of money in your bank account. So we started to see the inflows of there. I still think we're kind of in a risk off market, and I think that's why a lot of the money's flowed into Bitcoin. But I do expect there to be a mini altcoin season within the next kind of couple of months, and we might see kind of slightly more risk on environment as people start to think a bit more risk on, I think that's when altcoins will perform pretty well. However, just want to calm your expectations. The crypto prices are going up, but I don't expect us to hit all-time highs in 2022. But that doesn't matter. It doesn't mean there isn't still a lot of upside potential in it. I expect Bitcoin to hit a kind of a wider range, and there's still a lot of upside for this year. But going into 2024, when we have the Bitcoin halving, Bitcoin usually hits its peak around 16 months after the halving. So we're talking about 2025. And I think all catalysts kind of point to the fact that that this could be very good timing, because I think if we start to see those interest rates come down and we start to see some kind of more risk on behavior, and we're starting to see some more weakness in the dollar, whereas the dollar was very strong in previously to that last year, we're going to see a lot of inflows into Bitcoin and crypto. Okay, so 3 major areas I wanted to talk about in terms of crypto. The first major area was the Shanghai upgrade. Basically, what this does is they've allowed the Ethereum network obviously move to proof of stake over proof of work last year. And it allowed people to be able to tie up the Ethereum in staking if they had over 32 ETH. And what happened is they had to hold their money in staking until the kind of beacon chain was put in place, and they were able to withdraw the staked Ethereum through the Shanghai upgrade. So that has now occurred, and Ethereum has actually done very well this last week or so, and actually Ethereum has actually gone over $2,000. I think it's $2,100 at the moment. So we're seeing good movements in terms of Ethereum. The second piece of news I just wanted to bring up was Shaquille O'Neal. Obviously, he's a ex-American basketball player, and actually he has been charged, as well as many others, for promoting FTX. Obviously, we all know what happened with FTX and them going down in flames last year. And now the US government is starting to round up the key people that were promoting them. To be honest with you, it doesn't mean really that the people that were actually promoting FTX actually had anything to do with the decline. They probably weren't aware of all of the major issues that were happening in FTX. But this generally happens after there has been a slaughtering of retail customers. It's very popular for the US government to then round up, the SEC to round up these promoters who have actually lost people a lot of money, and try to extract money through them through lawsuits, etc. The third piece of news I wanted to bring up, and it's actually pretty good for our portfolio. What happens with BNB and the Binance Smart Chain is that very regularly they do a coin burn of BNB, which is in place really to reduce the amount of total supply of BNB over the long term. And this is usually pretty good for price. You start to see some nice increases in BNB, especially when the market's going up, when they do these burns, because obviously everything that they burn, it kind of makes your BNB more valuable because of the scarcity. So pretty bullish still on BNB. Not only the Binance exchange is obviously going to do pretty well through you being able to use BNB in terms to reduce exchange fees, but also the BNB token is used increasingly through a lot of these dApps which are on the Binance Smart Chain. So last chart I just wanted to show you before I sign off for today is the Bitcoin, one of the Bitcoin charts, and this is the transaction count momentum. And what this does is this measures the amount of transactions on the Bitcoin network, but it does take away some of the fudging that could be done potentially on these types of charts, because it takes away a lot of that kind of exchange volume. Obviously, exchanges have big wallets in which they use to store users' Bitcoin and other cryptocurrencies, and obviously they do move them from wallet to wallet, etc., which can skew some of these transaction counts, but that has been eliminated from this. So what we actually saw is, non-surprisingly, during the whole bear market, we saw the momentum of transactions reduce pretty significantly over that whole bear market. But what we have started to see is that increase generally happens when the price increases, but we've started to see more transaction on the Bitcoin network, which is very healthy, I think, moving forward. And now we are pretty close to the cycle highs so far. So that looks pretty good overall for the Bitcoin network. Still pretty confident about Bitcoin for this year and also for 2024 and 2025. But you must note that it could be a bumpy ride. There could be some volatility between the ranges. So don't be disheartened if there is a dip in crypto, sometime over the next couple of months. It kind of has to do this. We're in what I like to call crypto spring. And crypto spring really means that sometimes we have sunny days, sometimes we have rainy days. Yeah, but it's not sunny days all the time, and it's not rainy days all the time. So it's generally more sunny days, which I think is why we see an increase in price after the bear market. But there is some pretty significant dips in between. But I think for those who can be patient and can hold on to the cryptocurrency, I think they're going to be really well rewarded in 2023 and 2024 and beyond. So thank you very much for listening today. As usual, please join my Discord group if you haven't already. Gonna have to love you and leave you guys, but until then, have a great week ahead.